Hi guys, welcome to the meeting. Today our meeting of matters will be on D. Martin, as D. Martin is a high technology company that operates by selling their system to the nations. Multiple severe issues were found in the field, for instance like the manipulations of information and the internal relationship between the audit firm with the D. Martin. Other examples, significant classes of transactions account, identifying the related parties, going on risk, the weakness governments of their corporate, as well as understanding the client. For now, we will have our first speaker, Guorong, to start with.
Cut to the chase, due to the S1A technology, D. Martin's wealth has been greatly improved in a few years, but since January 2011, S1A failed to achieve the expected revenue, so the company decided to independently assess the defense of cyber attacks on all systems. Chris, the company's new head of IT, concerned about the robustness of system defense. D. Martin tested its own system and found a range of vulnerable. The IT department did the vulnerability analysis and provided two options to fix the bugs. Either they made a purchase that would take up of 9 months or a replacement on the system taking up to 2 to 3 years. The company finally used option 2. The decision makers only focus on cash outflow and try to figure out the funding issues. They do not have any experience with IT problems and not clear how real the risk is. The concern about extending the bank facilities. At the end of 2010, D. Martin's competitors launched a series of new systems, but D. Martin promised that they would launch the S1D system as a game-changing system that was not on the schedule. CEO believed that S1D will pass the test, so retesting will not be scheduled in advance. This mistake has seriously affected D. Martin's profit and damaged investors' confidence for the company.
Is the assurance given by the Richard is sufficient to prove that he has no family relation with the Prementor?
No, Sam found that Richard's sister was the founding director of Prementor, a former D. Martin supplier. However, Richard denied and presented some assurance to ensure that his family did not continue to own or control Prementor. However, the strange thing is that D. Martin stopped its contract with Prementor last year due to the invoice issues, but the payment is still being paid to Prementor. Sam conducted further investigation and found that Richard's ex-brother-in-law is still a director of Prementor, which may suggest a connection between him and the Prementor. Furthermore, Chris was snipped short by Tom because of the affair. Fearing that he would affect his future and the harmony of his family, therefore he was threatened to use the network security company recommended by Tom, and Tom received a huge wealth from it. And it's convenient for the Tom to steal the data of D. Martin and sell it to others to get huge profit from it.
Thank you, Guorong. Anyone has questions?
I do actually have a question. So, then what are the responsibility on both management and TYSL accountants?
Great, this is for Yuqi's part. So Yuqi, are you ready to explain?
As we know, D. Martins and the TYSL auditor have their own separate and distinct responsibilities. For maintaining the accounting system and preparing the report was the company's responsibilities, but the auditor's responsibility does not include preparing the report. The response for the conducting and audits of this report by evaluating their contents against the criteria of the accounting standards and relevant legislations. There must be judgment when choosing procedures and evaluating the evidence. In this situation, TYSL is an external accounting company. The liability of the auditors during the audit procedures is to make reasonable assurance by gathering the sufficient and appropriate evidence that is not material misstatements. The auditors of TYSL should provide an opinion of the truth and fairness in the financial report due to threats of errors. The current auditor should be active rather than responding to threats. To secure the possible fraud has been examined, TYSL accountants must present their professional specialisms approved when assessing the risks. In other words, all of the participating team members need to be realized during the audit procedures. When the auditors take into considerations the condition of team members that target financial goal may lead to high risk and frauds. Based on a professional judgment, the auditors should expert of their knowledge and trainings. The use of judgment rely on their experience and skill to fulfill their duty by giving a true and fair value of the financial statements and find out the unusual transactions of activities. TYSL accountants should respond appropriately in any defense of suspicious fraud events, such as appropriate disclosure of fraud risks of the demonstrated communities. They must be considered all of the customer background, such as a business account of transactions and overall risk of control of the management. Lastly, the discussion is required for those assemblies of the meetings to ensure that the whole engagement team is in the pictures of the responsibilities and risks of the fraud, also the error. The communication method should be determined by the mentors of its partners.
Alright, now let's move on to Jia Xuan regarding the ethical threats.
As a professional accounting body, TYSL accountants should maintain independence. In other words, all accountants should act with integrity, objectively, and with professional skepticism. However, some auditors were not doing well, which leads to false assurance. Firstly, auditors found that there is an unusual payment to Pimentel and Joy has mentioned to Patrick. Patrick just went to meet Richard and got an assurance from Richard. He didn't even ask for any reports. As a member of professional accounting body, he needs to comply with fundamental ethical principles to act diligently, taking care to complete each task thoroughly. If he checks the financial report or another financial statement, he may discover the relationship between Richard and Pimentel earlier, much fewer problem later. Due to lack of auditor independence, credibility and reliability of the financial report have been affected.
Any other auditors got ethical issues?
Yes, it was found that both Auditor Junior Dan and Senior Auditor Manager Joy acted due to negligence. Dan didn't check the Pimentel report as he didn't know what to look for when Joy didn't inform him. In addition, Dan lied later. This led to wrong judgment by other auditors. Another matter was that Dan offered the file to sign when he shouldn't according to the ethical obligation confidential information.
How would you reduce the ethical threats to a reasonable level?
There are two types of safeguards to independence. First, it can be created by professional legislation or regulation, such as setting the policies and procedures to implement and monitor quality control of engagement. The other type can be created by the clients by developing internal procedures that ensure objective choice in commissioning non-assurance engagement, where the client has a corporate governance structure that provides appropriate oversight and the communications regarding the firm's services.
Thanks for the details. Now let's move on to the audit key matters from Ian.
It is the auditor's responsibility to determine, communicate key audit matters or KM to those charged with governance in the audit report. KM represent auditors' professional judgment in providing additional information for intended users, based on current financial statement to further enhance understanding of the most significant risk. In this case study, there is some KAM and TYSL contents should be disclosed in the audit report of the merchant, such as unusual transaction from the firm to the Pimentel company that is becoming more frequent. This is considered an area that identified as a significant risk, therefore required significant auditor attention according to SSA 315 in determining KAM.
So have you found out any parties that are related to unusual transactions?
Richard Dalton, ex-brother-in-law, happened to be one of the directors in the Pimentel company, which may suggest a fraud through a family connection. Sarah Hancock, the audit partner, should have proceeded in disclosing the relationship between Richards and the Perimeter as a KAM in the audit report. Not disclosing a family connection would be an auditor integrity concern. Of course, in communicating the KAM, it should not outweigh the public interest benefit. But by putting the effort in collecting documentary evidence in this matter, auditors can arrive at their opinion on the truth and fairness of the client financial report.
Are there any key audit matters that are worth mentioning?
Another KM that needs to be disclosed is the current technology value of the radar system. The current value is determined by the revenue of S1A, S1B, and S1C. With the fall in S1A sales and the exclusion of S1B and S1C sales resulted a significant impairment. These significant events need to be disclosed by the TYSL accountants in the audit report as an impairment effect the company financial statement and its profitability altogether.
Thank you, Ian. Now it's finally my turn. So now I'm going to talk about the audit strategy and the audit plan regarding the next audit team on the team.
Before you start, based on the discussion we just had, there will be a need for special treatment required during the audit then?
Yes, it is one of the questions posed during the research. However, before the auditors start, the auditors have to perform an initial planning audit in the form of investigations on the integrity of management, the financial indicators, as well as the motive of their audits. Because the auditors is exposed to a high level of client business risk, as well as the acceptable audit risk based on the entity's past history like LX and CEOs. Well, this has raised the importance of 3 points, which is the audit strategy, where it's a form of guidelines, and the audit plan, where has 3 processes, which is the risk assessment, the risk responses, as well as the reporting. Lastly would be the engagement letter.
Isn't engagement letter is a necessary process?
Yes, however, in the market case, it's essentially important as it is a form of contract that indicates the information of the auditor's objectives, as well as the auditors and the management's accountability and their responsibility during the audit. However, would it be necessary for the engagement to add additional line on the related parties when Sarah didn't as she should have? I will leave this matter to the team to decide. Next, during the risk assessment, it's important for the auditors to anticipate potential risks exposed to and within the entities from achieving their objectives and making certain reviews on the potential investment losses. Next, it's important for them to conduct tests of controls and substantive testing on all transactions and accounts for potential briberies, as well as the bogus of suppliers' payments for their own self-interest.
What's about the audit rate? Should the audit team proceed to the inherent rate and control risk as it should be?
Yes, we are coming to this. The audit team should carefully set the AR, IR, and CR in order to calculate the DR in a systematic and rational manner. Later, the auditors will allocate time and manpower in a reasonable amount in the high-risk areas. For instance, when Sam went all the way down to check whether Pimentel has the existence. In other words, the auditors who will be handling the merger next year have to create trust and openness culture in the team and exercising any specific procedure required during the audit to ensure that it's the truth and the fairness. Secondly, the auditor team should not only rely on the information provided by the demergent representative, but also to check performing investigations on verifying the information reliability. For instance, when Richard told Sarah his family has no longer interest in the Perimeter, but it was only oral. Thank you. That's all for our discussion for today.
Thank you for watching.
Firstly, it's okay. And the teams. Besides that, John and Dan has breached the code of ethics 111.